I've dabbled a little bit in YM and RTY and gold, and they all trade very, very thin. And so the ones that I kind of settled on for myself are CL, ES, and Q. And I think it was Terry or somebody had previously asked, and I kind of forgot to um, answer the question, but it was, do you trade other instruments and when? I've never traded Forex. Maybe once or twice I dipped into like the euro dollar, but also that felt very thin to me the way it acted and traded. Um, so what I do between the three instruments is I kind of watch the ATRs and I try to determine, if things are getting a little out of hand and a little too volatile, then maybe I'll trade crude for a while or vice versa. So it's helpful to be very familiar with a couple different things. Try to be, in my mind, I always liked trying to be a specialist in the S&P 500. So when I was trading it from the stock side of life, I traded the SPY for years. And then, of course, when I got into the futures, I started trading ES. The Let me just finish this here real quick on the CL ATR. The 5-day ATR is $2.85 right now in crude, and that is the smallest that it's been in quite a long time. It's been contracting slowly as we've come back down to fill the big gap there at 68.5 or whatever it was. And yesterday we had, or was it yesterday or 2 days ago, we had a very nice tight range doji day setup. It was yesterday, I guess. And it was also a false down day. So it printed a red candle, but it was up on the day. So it's just something to keep in mind. It was also the narrowest range day we've had in a long, long time. Only $1.83 of range action. So for me personally, I kind of think this is sort of the really good setup moment for crude. If you want to be long, I personally would not suggest being short it here, although it could still go down more. But if you want to be long, you have a really nice tight risk reward setup. You should be able to see this thing print back up to 75 or 76. And actually, then there's a big gap up around the 83, 84 level, I believe it is. So that's one bigger thing to look at from a swing trading perspective. I know a lot of people here are really good swing traders and like to do more swing trades. And so that's kind of occasionally the type of trade that I'll look at is taking a position trade, especially with the way crude and the ES have interacted. That correlation has decoupled somewhat, but it still is a pair trade that I like to put on upon occasion where I just kind of get to a point where I say, like, look, crude has gone down so much in the past. Just last week it was down 10%, right? But the whole move over the past couple weeks has been bigger, like 25%. So, okay. So then the other thing that I do is I just start out with updating my opening prices, which I know you guys are used to as well. And depending on your software, it might do that for you. But with TradingView, I like to just plot this orange horizontal line. So in crude, we've got an opening of 70.96, which was the NYMEX open 30 minutes ago. And now here we are getting ready to open on the ES. I'll go ahead and drag this up and let's see what we can get. We're pretty close there. And then I can adjust these. And then for people that don't know, like my general trading strategy is to be an intraday trader. Um, when I'm trading well and not over trading, I'm kind of looking generally for, a few good setups a day at the most. And typically, when I keep it limited like that, I do better because I'm being more patient, more selective, and then kind of try to get one that goes your way, and then manage the runner from there. So um, here we go. We're open. We got a 7,500 open perfectly on the ES, so that's always fun. um, NQ 30,000 047 and a half. And I'm not generally trading opening range breakouts or anything. So my style is to sit and watch and get a sense for whether we're trading up and down versus the open, and then what kind of uh, internals and stuff we're going to be looking at as well. So got the open on the YM at 659. Getting old here, my glasses. And the open on RTY at 2760. Okay, so I've got everything updated there. And now we wait and see how big this thrust can be in the first 15 minutes. Again, we're gonna see what Chicago PMI looks like at 9:45 Eastern. And just as a general sort of a general indicator, I watch on one screen. I watch the screen you're seeing here. So I have 15-minute charts on crude, the ES, NQ, YM, and RTY. Then these are my 1-minute charts for NQ, ES, okay? And then on a second screen that I'm not sharing because it gets a little complicated, hard for you guys to see, but my second screen, I have the tick chart on a 1-minute. I have the crude chart on a 1-minute. So basically, when I'm trading crude, ES, or NQ, I'm trading the 1-minute in conjunction with the 15-minute. D-Boy, thanks, buddy. How you doing? Looks like D-Boy got a good fill down there, and NQ pushing up to run stops to the upside, it looks like. Okay, then on my second screen, I also watch the bond markets on a 15-minute chart. So I watch the 2s, 10s, and 30s. And then on my third screen, I have the advanced declines on a 1-minute chart. And then I have the Mag 7s on a 15-minute chart. And then I have the S&P 500 heat map, which shows, the squares that represent the size of the cap, the cap size of each company, so that you can get a feel for looking across the board. This is a lot about how I like to trade and get a feel on the day. I look across the board and say, what kind of day does this look like for us? Okay. And one of the first things that Dad kind of taught me and got into with me in terms of screen trading, especially, was basically just trying to identify whether you're in a trending type of environment or a range bound type of environment. And it's one of the trickier things to do in trading, is to not only identify it, but also identify when it's changing from one to the other. Um, and so trying to develop some of the skills or some of the ways that you read that is, I think, one of the really good useful tools that you can try to develop as a trader. And that's why I look at all the different things that I do, because the way I look at it is I want to be a trend trader. And the reason is we get more follow through in price, right? When we have trend trades, it sort of empirically is telling us that some part of the market is sort of mispriced, and so they're repricing where whatever that part of the market needs to be, and that's what sort of makes the trend is, big buying or big selling coming in to do a end of month or end of quarter rebalance, or you know rotational kind of stuff like we've seen like crazy in the tech world. So for me, that's one of the big things that I first try to do is identify, is this the type of day that could be a good trending day? And then does the price sort of confirm that for me? And my answer for today is yes, I believe today can be a very good trending day. You could have some two-way street like Danny's talking about. You can have the rebalancing happening one way, and then they get too far one way and they sort of rebalance their stuff the other way. So it's the kind of trade that you can expect to possibly take longs and shorts in the same day, unless you're someone that uses a filter like a long trader only, which I was talking to Chris and Jojo the other day about that. It's like, how much money would I have saved over all the years if I just was a long trade only kind of trader, because markets generally go up, right? So if you're kind of new to the game, that would be something that you could use as a filter. Just it would help you tremendously to kind of stay with long trades only. You still want to do like some structure to it where you only want to be participating in uptrending kind of price action, and then when things get sour and they go south on you, instead of trying to capture that short, you just wait for price to stabilize again and turn and then go to the upside. um, for me, I learned how to trade in 2008. And so I have this sort of, I guess, affinity to short. I like shorting. I'm pretty good at it. um, but it takes, they're very quick trades, and it takes real precision and focus to get it right. And I think you have a little more leeway with your long side trades. So I probably should just be more biased to the long side in general. But so right now, just glancing across the board, well, number one, I hope, do you guys have any questions so far? Do you guys like my sheets? Do you use my sheets? Do you have any questions about my sheets? This is basically like part of my daily process where I enter the it's basically the open, high, low, close, for each instrument, and the volume, and then it goes into a sheet like this. And there's a lot of information on here. What I like to use this for is a way of not having my charts look too crazy with a bunch of lines all over the place. So I do have my moving averages, but when I look at levels, I can quickly glance over to my sheets, look at a level, and try to compare where we're trading and see if there's some level coming up. Obviously the prior day's high and low is always important. Similarly, like monthly and weekly um, types of extreme levels, like the weekly low that we made last week is going to be an important one for us to hold and stuff. But we rallied off that pretty well, so that's a good sign. Looking at uh, let's start with just ES. Looking at ES, we opened 7,500. Our overnight low is like 74.82. We rallied up to '08. And if you just do a quick glance at the sheet here, 74.82, like that looks like sort of a 13-day moving average kind of level. See, it coordinates pretty nicely with the monthly pivot as well at 76. So sometimes I just look at those things and say, where might a level be that it's likely to hold if we are going to continue to the upside. We made a new high here about in the overnight. We got up to what, 75.18 or something like that. So it's a tricky one because you could say that a lot of people got sort of too long and they may be stuck and we could get a sell-off. But I like that we came back in, sort of put in a little base and a little double bottom, and now we opened, we're above the opening price. Our moving averages here, this is on the 1-minute chart. I use a 13 period, just simple moving average. And then I'm looking for pullbacks to that. So once this moving average started moving up and sloping up like that, I want to basically be a buyer and look for long entry trades, and then if you get one in here, like that would have been a pretty good one, or you could have tested the opening print. Then as it moves up in your direction, you can scalp out of a couple and hope for a runner. But let's see, from the rest of them, the rest of the stuff I like to look at starting out the day is just where everything's sort of broader looking like. So the advanced declines, we started just barely positive, sold off to minus 500 or so. Now are picking back up minus 370. We've got kind of a mixed look at the Mag 7, Apple's bid, Amazon's bid, Tesla and Microsoft are pretty bid, and then Google and Meta are selling off. Nvidia is pretty much unched. And if you look at the S&P 500 heat map, you've got a pretty mixed board, a lot of green and a lot of red. So, and then across the indices, the bond markets look weak in the overnight and starting the day. Obviously, the ES and NQ are moving higher, and RTY and YM are kind of unched. So here we go for a couple more minutes, minute and a half on Chicago PMI. I don't tend to sort of trade the news that much, like purposefully, but what I do like to do is just make sure that if you have a number coming out that is coming out, let's say you're long right here, make sure you have an offer way up above the market, right? Like just put something in. You can use my levels sheets or whatever levels you like to look at and watch, and you can try to target like, if R1 is what, where they were targeting 285, it got pretty close, but it didn't quite get to R1 on that NQ sheet. But what if it gets through R1? What would be the next level, right? R2 is at 575. you've got a prior monthly close at 389 and a half. You've got so this is how I kind of like to see. You've got our prior weekly open at 577. So you can use stuff like that to stick in an offer if you're long, and then if you get a big print, sometimes they'll sweep all that liquidity and fill you, and you barely, if you don't have that order in, you don't get the fill because it's too fast and everything. So especially with those big exits on runners, I think it's really important to have something in there. Like, it never really hurts to buy or sell the extreme rips or dips, especially to cover your position or to cover part of it, however you like to do it. But so let's see what the number was. Chicago PMI 56.7 versus 55.1 expected. Not a huge, delta there. So when I'm trying to identify if we're going to have a trending day or not, that's part of what I'm looking at is there some kind of news that is off the mark, where the market expected one thing and the number came in much different. It doesn't matter which way, because it doesn't matter how we feel or, excuse me, what our opinion is about that. What matters is if there's some surprise. I mean, obviously the surprise news events regarding the war and those kinds of surprises that come out where you have no idea, that's why you get the crazy spikes, right? But when you get these data sets that are coming out every week, then I just watch to see how different they might be from the expectation, or from the previous number. And when they're off a lot, that's a very good indication that, hey, somebody's off sides here on this, and price is likely to move more or in a more trending manner than it might otherwise. So the other big reads I have on that, and then none of this is really that complicated, but what's complicated is trying to decide and figure it out in the moment, right? In the heat of the moment. But what I use a lot are the advanced declines on the New York. And what I like to see is that number to be plus or minus greater than 700 for a trending type day. Okay. And it's something I've observed over the years, is that when the advanced declines are less than that, so like right now they're minus 360 on the day, minus 363. If I look at the advanced declines and then I also quickly glance over and look at the heat map, which I'll put that over here. So here's the heat map. You can see it's starting to look, let me make sure I have it updated. Okay. It's starting to look a little bit red, in my opinion, right? But there's still a lot of gray here. And then there's, of course, still a lot of green on the tech side. But what I like to see on big trending days is all red or all green, big risk on days or big risk off days. And then some other element like the advanced declines being, an extreme, like 1500 up or down, or if they start out at 0 and they go quickly to minus 1,000 or something like that, that can help determine that it's going to be a good trending day. Um, and all I'm talking about really is when price is trending, you'll get more follow through, and it's a time for me personally to sort of take more risk. Maybe put on a little bigger size, maybe look to trade a little heavier than I might otherwise, and really just try to get into the flow of what's trending and how the price is, moving, and then where it might react to. And to circle back on that, these ATR boxes that I put in on my charts have been really good as far as um, the fulfillment, because the algos use all this mathematical stuff, and you'll see it happen. Like if they have a move that goes the full distance of the ATR, oftentimes it at least reacts to a test at that level. And sometimes you can get into where it's contracting and it wants to move less. And other times it gets into where it's expanding and it wants to move more. But what I like is if you're watching crude, and crude's been in a big downtrend, and here you have, some overnight up move, but then a failure up here, a dip back below the opening price. You can use this concept, whether you draw a box for it or not. You can use the concept to just sort of theorize, okay, crude, maybe if the high of the day is in, you can draw that, bring that box down, and you can say, maybe it goes right back down and tests these lows at the 68.5 level. Maybe this is too obvious of a trade still for everyone to get long, and the big players are just going to force that liquidity down to the downside. um, so if you were shorting crude right here, which again I would not suggest doing that right now, but if you were, because it's a trade that's worked, I mean, sometimes you also want to do it because it's worked and you keep doing what works, right? But if you were looking for your exit on a crude short right now, you could target that lower end of the box, which would be perfect ATR fulfillment. If you were theorizing the other way, that this was our low on Friday at the 68.5 level, whatever that precise number was, and let's say we're putting in a higher low right now, then this overnight low should be our low of the day for crude. You can drag that box up, put it right there, and if you get a nice little recovery here, maybe above the open, and then can buy something with a 40-cent stop or whatever your risk tolerance is there, then your target should be up at this level. And if you have a news catalyst, then look, this thing has contracted so much compared to the volatility we've seen, that on a news event, that's why I say don't be shorted here. On the news event, you could easily get back up to 76 in a heartbeat. So that's how I kind of like to look at and theorize where price might move for the day on a specific instrument. Nice punch to the upside. So we got through the 285 level on NQ, through these overnight highs. Let's see what ES has up here. So ES has an R1 at 33, and then a weekly R1 at 45.5. Okay, and then if we're using our ATR boxes on these, let's say the overnight low is our low of the day, right? Can move that right up. That's my target on the ES for the day, 75.90, assuming that we continue to trend, um, that they want to do a end of month, end of quarter markup. Um, again, it doesn't have to be a meaningful thing. It could be meaningful because if we look back at our sheets here, um, the move down from our June 15th all-time high in the ES was a 3.81% pullback. In NQ, that same move was a 5.86% pullback. Okay, so those are good garden variety types of pullbacks, assuming that the uptrend is still intact, that we're in this kind of super boom cycle. The economy's good. Yes, we have a little bit of inflationary pressure, but maybe that's subsiding as we speak with oil the way it's dropped. Um, so we still could just be in this kind of Goldilocks mode of it's still a good place to be in equities. Now, the other hand is to look at, if we flip these over to a daily chart, on the other hand is to look at this stuff and say, well, if we were to fail here and come back down and break these levels down below this early June swoon that we had, then you could have really a monster just pattern formation and a double top, head and shoulders, a big sort of air pocket all the way down to the 64, 6,300 level, wherever we tested on that big low. And frankly, that would not surprise me at all. I talked to my dad a lot about sort of macroeconomic kind of stuff, just because he's been involved in all this stuff for so long. It's great to hear his take upon occasion. And, one thing he just has reminded me of over the years is like when the Fed gets into a pickle like this, they often, you can often have like a big trading range that can develop based on these sort of little smaller cycles of inflation raises its head, the Fed has to hike, so the market takes a little hit, then things get weak, the employment stuff starts to become their priority, so then they start to cut again, goes back up. So sometimes you can have the markets kind of price stuff in, and I think in today's world, even more so, you can have them price in stuff to perfection, in the sense that all this information and everything, the speed, the nature of the speed of everything is so incredible these days that it really seems like, yes, the markets are a discounting mechanism, and they just get it all discounted and baked in so quickly. And so anyway, there's just sort of like a side note to, what could happen here when you look at the way the RTY and YM have set up. It could be that the RTY and YM, well, sort of more of the RTY, just to talk about like overall market breadth. It could be that the RTY is showing us that, hey, this rally is actually truthfully broadening out, and that RTY is becoming more of a leader, in the sense that there's a broadening here, and we're gonna we're going to see these NQ and ES markets continue to break out and continue to make all-time highs. I can't remember, maybe it was the weekly that I was looking at, or I kind of noticed, yeah, this is what it was. On the weekly charts, you see right here on the left side, the RTY chart, how it made that new high. It kind of put in this little, ABC pattern or whatever you want to call it, and then started moving higher. Same thing over here in YM. And in NQ and ES, we're still kind of in this little ABC pattern. So that could just be an ABC on the weekly, a little back and fill like Danny likes to call it, just some consolidation before we make another big push higher. So all right, we got our first 30 minutes of price action in. Hey, good morning, Manny. How you doing, buddy? See where the NQ printed to. The high was 374 on that print. And I look at my sheets. I think there was a number up in there. I can't remember. I kind of like to look at it to say, was there anything that I think was meaningful? There was the prior month's close was 389.5. That's about it so far. ES, like I said, the R1 was 75.33. In crude, would definitely want to watch. I think above the weekly pivot at 72.30 could get it going pretty good. But we've been trading 30 minutes. We've got our advanced declines are now just minus 120. So recovering a bit, but my expectation would be maybe get those to start going positive on the day. And you start getting a nice green day across the board. We are seeing continued weakness right now in the bond market. And kind of want to check over on like stuff like Bitcoin. We got the VIX trading on its lows, 17.2. Bitcoin trading 59,000. I think it had dipped to 58 or so this morning. It got to a low of 58,200. We have seen a little bit of a move higher in the dollar, so that could also put a little wind under the crude market, I guess. I don't know. I'm not great with currencies and how that stuff affects each other, but we did get a new high in the dollar yen, so that's maybe something to watch here as well. I think, yeah, could be a significant breakout and something really to pay attention to. So here we are on the ES. We're testing, almost to that 75.33 level. So let's see if that level is significant at all. What you want to see really is a move through that and then have that level be your new sort of line of support. But right now, for my system personally, I'm looking to buy and go long, right? I'm above the opening price. I have a 1 minute chart and my short moving average here that's sloping upward. And then this is the bigger moving average that corresponds to the 15-minute chart. So you can see that that was sloping upwards in the overnight, kind of went sideways. It couldn't really push lower. And now that it's pushing higher, that moving average starts to turn and slope upwards. Of course, because those are lagging indicators. But what I like about using moving averages for sort of help on the biases is that you can keep yourself out of trouble. So like for me, when I like to short, it's like right now I don't have a signal to be short. So it doesn't mean I have to buy it. Like if I'm really negative on the market and I think that it's crazy to be buying it up here, that's fine. But instead of trying to catch this top, you know, ideally I would rather see it roll over, see the slope of this moving average roll over, and then start looking for your short entries, because then you can use whatever those highs are as a defined stop level. It's okay to use levels and to use the level sheets. Like I do that sometimes. And like Manny's great at it with his setups every day. It's a great habit to get in. Basically markets, when they can't push or expand through a level, then oftentimes that's the indication that they're going to go the other way and trap everyone, right? So what I try to do in my personal intraday trades is look for a similar scenario where I can buy or short a level that's being retested. And oftentimes, because it's on such a short time frame, it's not necessarily that meaningful. However, because the algos do use the mathematics for their buy and sell programs to trigger, along with timing, or I mean time of day, that's certainly, as Manny and the gang have kind of shown over the weeks and months here, like that's a great tool to use as well. um, like the first half hour of price movement, here we are, we've established a nice uptrend. Now do you get the next half hour where they reverse it and retest the lows and sweep it, or do you get follow through for the next half hour? So sometimes the bigger traders, do all their position squaring in these first hour and a half time frame, and so you can have some really good signals here. So right now you could be buying this pullback, but where do you want your stop to be? You probably need it to be back down underneath here, right? But that's for me, that's a wider stop than I like to take. So what I'd like to see is for this bar to close and then possibly buy the retest of the low of this bar, but with a very tight stop. And then as soon as it starts to go green again, you're scalping out of a couple to try to get, a risk-free trade. Now, for me, I'm kind of looking at the bond market. I don't really like it. I tend to feel like if the bond market starts to accelerate to the downside, which means yields start going higher again, and if we have this low that possibly could be put in the crude market, you could see that this market could still have a little trouble getting going to the upside if inflation starts to look like a real sticky thing again. But on the other hand, hey, we had our little garden variety pullback, and that's what they talk about all the time is, making sure you're participating in the pullbacks for your long entries or to add to your positions on, your investment portfolio, that kind of thing. It's harder for me to do because I'm more of a trader. I like to get in and get out. go climbing or something in the afternoon, call it good. So yeah, a lot to talk about all the time for me. Like, this is what I constantly do is I just look across my board or across the screens, and I try to get a sense of, is there something that the market might react to, and that maybe we can find a leading, a little miniature leading indicator. It doesn't always mean that you jump in right away, but sometimes you can get into these modes where you figure out what's leading, and you can actually take some very quick trades based on um, seeing something first and then jumping in, and then the market follows, and you're just like, wow, that was such an easy trade. um, I typically do a lot better with my trading if I wait an hour and let the price discovery kind of show its hand in terms of you know where we really want to go throughout the rest of the day. um, but a lot of people absolutely love the opening setups because you get these nice quick moves right off the open. Usually it's like this where you get a 30-minute thrust, and then you can get out and be done as well. I'm just not as good at, partly because I'm in Colorado, right? So I don't want to get up early. I wake up at like 6:30. So then I have an hour to get ready for the morning. Um, and my dad he lives in Reno. So when I was learning how to trade and just sitting and watching him on his screens, it was always like the opening there is at 6:30 in the morning. So when I would visit him on vacation and stuff, I'd be up with him at 5:30. Um, yeah, sometimes I feel like East Coast is pretty sweet for that whole deal. Um, so yeah, being kind of patient here. Um, just another quick read. We're still minus 100 on the advanced declines. We've got Apple and Microsoft and Tesla are bid. Google has recovered some, but looks to me like Amazon, Google, Meta, and Nvidia are starting to show weakness again. And sometimes the rotational trade in the Mag 7 is that they sometimes buy Apple as a defensive kind of positioning, and they'll start selling everything else. So when Apple's sort of ripping like it is, I mean, it's not out of hand or anything. But that could be a tell, along with weakness in the bond markets, that maybe there's going to be a little more sell side activity through the morning session, which might set up really well for then a big short squeeze going into the end of the day, end of the quarter. We are still 15 minutes away. We had our jobs numbers, the JOLTS number. Looks like a little more openings than expected, than forecast, but about in line with what was previous. Consumer confidence somewhat down, 91.2. Previous was 93.1, expected 94.7. Jobs quits, definitely a little tick up in the job quits numbers. And again, I don't know what any of that stuff translates to. I just want to know if there's some imbalance there, and then if the market reacts. And so far, we're not doing much, right? We've come off a little bit, stabilizing some, but we've got RTY is eyeing highs. Looks like it's about to make a new high and just did. YM still below its open. but NQ and ES still above their open. So, you got to still be thinking long here, I think. That's the structure so far. This is sort of like a potential short reversal setup that we're getting in the ES, right? Because it came all the way down into this pattern. We could put in a little mini head and shoulders top here where this is the left shoulder, this is the right shoulder. And if price breaks right here, then you're going to see that moving average start to slope downwards. And your target on that kind of trade would definitely be here at the moving average 75.07, but a better target would be to see if they actually break the open and run some of the downside stops. If this thing holds, then this is like a really classic sort of recapture uptrend setup like David likes to talk about, because you get your pullback, you get a nice balance area, and then you'd want to be getting long above the 27s here with your stop below, and it should just go right on up and through, right? For me, I use this. I use these moving averages. It's an indicator I found where it just helps keep me aligned in the sense that when this moving average starts sloping up, it turns green. And when it starts sloping down, it turns red. So if I'm seeing green, I should be thinking long. If I'm starting to see red, I should be either questioning it or wondering about possibly trying a short or just waiting and seeing. And then this other indicator I found is a thing that colors my charts because I like to wait for an hour. So this is all overnight price action. And then you'll see my two time frames that I'm trying to find entries are in the afternoon session, 11:30 to 12:30, which is mountain time. So that's, we're 2 hours behind. And then in the morning, 8:30 to 9:30. And, sometimes that means I miss a really good trade, really good entries on both sides, but that's okay. I'm trying to be more selective in my trading. Like I said early on, oftentimes the more selective I am, the better the results. If I overtrade, overtrading is a really hard thing to control and gets you into trouble. And it's something to be aware of for sure. If you have a day where you've overtraded a lot, it's a good idea to take the next day off. Because usually if you've overtraded, you've also, given away a lot of money, and you don't want to come back the next day and revenge trade and try to, you don't want to try to get it all back in one shot. Like you can sometimes, but usually if you have that feeling about you, then there's a good chance you're going to push too hard, have another loss, and then that loss leads to the emotional trigger and possibly like you're tilting and revenge trading. So, and everyone does it. It's part of learning how to trade, how to control yourself and your emotions and what you're doing. But you can really feel how we've kind of gone into summer trade mode here. You get, you do sometimes have to adjust to that as well, and understand that if the majority of the price movement is early and then late in the day, if you're trying to trade for a goal or trade for a living with specific sort of daily targets in mind, then yeah, you might have to change your setup a little bit and say, hey, instead of waiting an hour, maybe I trade that first hour Where it gets tricky for me is when we get really blown out in volatility, like the ES still at $108 per day ATR is, that's a lot. You know, when you trade through times when it's a lot lower, and then you start to see how, you know, if we're trading, what, for a while there we were trading like 1,200 points a day in the NQ for a while. It's like, it's a tricky one to trade, and that's why some people like, you know, using the micros to manage some of that risk. um, I don't trade the micros too much, but I do sometimes. But it's more like if I'm kind of really trying to regain my rhythm and my confidence, if I've lost some money and I've lost my confidence a little or whatever, then sometimes that trading the micros can be really helpful for that, because you just focus on the execution. I mean, you should do that anyways, but sizing down, or sizing down in terms of the instrument, like using the micros, that really can help you with sort of getting back into the rhythm and the flow. So, okay, so this is like a beautiful little setup and indicator here. Let me get this blown up for you a little bit. So on the NQ, okay, we had our pullback. We had a nice big green bar that came in. And then to me, that green bar right there is the one to really pay attention to, okay? And here's what I like about it is that you had a good pullback. You had a kind of a reversal there to the buy, you know, from the buyers. They took out this high, this high, this high. Now it starts going sideways a little, okay? What I love about this is this candle right here ticks just slightly higher. And the reason I like that is because if I'm using this bar as my controlling bar, this to me is an indicator that the trend is going to continue. Even though it's a false, it sort of presents itself as a false breakout. What I like about it is it ticks above that level. Now it comes back down into here. And if you are getting long at the 340-ish level, you can put your stop right below here at, say, 25. You can put it down here, of course, if you want to use wide stops. But you can also put it down here at 25, and you've got a 15-point stop, and you just see, you know, if this thing continues. So those kinds of little miniature setups, it gives you even a second chance right here by failing to the downside, taking out the upside of that little box, right? And then look at where it pulls back to, perfectly back to that. Now, you know, again, at the time, you don't know if that's going to fail, but see how it's actually starting to slope to the upside as it pulls back to that moving average. So even if you missed it at 40, if you had your bid at 55, that was one that you got filled on, and then boom, it immediately gives you 60 points or more. It looks to me like we're probably going to see more out of this trade. And so those are little miniature micro setups that I look at on the 1 minute chart, and it all corresponds to how everything else is flowing through the day. And that's the way I like to trade this stuff, right? So I look back now at my level sheet. We're trading 420 or so. What did we say the next level was? R2 at 575, right? previous month's high at 536. Okay. And then flip back over to my 15-minute chart on the NQ. The yellow box being the 5-day ATR. Okay. So far, we've only traded about half that amount. So again, if we want to theorize that the low of the day is in and it was this overnight low, you can drag that box up to the upside. Zoom out, and the NQ could trade up to 840 on the day. Now, end of month, end of quarter, my guess would be if we trade up to 840, I would not be surprised at all if they don't expand that out and mark this thing up with a closing print above 31,000, right? Let's look at the ES again here. Same thing. I want to sort of look at where we drew this box to. I guess I didn't quite have it on the low, but it doesn't have to be perfect. It's just a visual representation. You see what happens if we start to get up to that box. Look at how many stops there are going to be up above those levels, right? So if they really just want to mark this thing up, the algos start turning on their buy programs. All the hedge funders or whoever else is driving the market starts marking stuff up. They start buying in the end of day, end of month, end of quarter, and you can have a big trending day that really, shouldn't be a surprise probably to anyone, but it's just the nature of how they sort of manufacture a squeeze on certain days or certain events, right? So I'd be looking for advanced declines to go to new highs on the day. Right now they're still minus 80, so we need to get back up above 75 or so is the opening print, and then we would want to see advanced declines close on the highs of the day, like a nice big plus 1,000, plus 1,500, something like that. So yeah, Philly D, nice long, I think here. You can see it's starting to follow through. And again, the 33 level on my sheet, that's your R1. So in theory, if this thing keeps going, you're going to get up through the 33s, and then that resistance becomes support, and you could have a really nice entry there. So when you do see some of these expanding bars on the 15-minute chart, a lot of people are going to use the low of this bar as your stop. But if you want something tighter, what you want to see is another big thrust on the closing print in the next minute and a half of this bar. Like ideally, I would like to see this bar sort of mirror or be like a measured move image of this long bar, right? And you can see that on the 1-minute chart that we kind of have, an up move, sideways, second wave, third wave down, or third wave up, fourth wave down, fifth wave up. And you want to see it print so high up here on the close of this candle that it should now not come back below. You see how the high of this red candle was 32 3/4, right at that R1 or whatever I said it was, R1. So if this thing prints up here, you just don't want to then see it reverse back down through the high of that candle. So you can tighten your stop up. In my opinion, you can tighten your stop up, because that would be a level that should hold, right? Like if it prints way up here to 36 or 40 or something, you don't really want to see it come back down into this range in the 30s. Because if it does, they're going to be targeting all the sell stops below that. If it comes back down into the 30s, they can easily bring it back down to retest the open, and it could just be running stops below these 15s. Um, but that's just sort of theoretical. See what happens on the closing print of this candle, and at least you've got a higher high now on this green candle, and this could be a really nice entry for you. And like I say, don't be too quick with it, because it's like if we fulfill the ATR on the day, this thing could trade easily up to 75.90, and boom, there's your, you know, uh, $3,000 per contract in the ES on the day. You don't need a lot of those over the course of a month to make a good living doing this, um, so okay, I'm gonna take a short bathroom break and everything. I'll be back here in a minute or two, and we'll keep going. Be right back. Okay, I'm back. All right, nice job on that one, Philly D. Starting to get some momentum here. We made a new high in the advanced declines. All the Mag 7 look pretty well bid. We've got, new highs across the board with RTY, YM, and Q. Crude staying down in the 70 range below the open. So this all is lining up pretty well for what we're talking about for continued upside. It doesn't mean they can't still kind of, do a little reversal sweep here, but the way these candles are looking, yeah, I like it. But like I said, you can now use that 33 level as your point of, do you really want it breaking that previous high and coming back down through here? Maybe you just have it down here if you still want to have some risk involved. But if you had more than one, at least hopefully you've taken a little bit of a scalp profit to lock some profit in for you, right? That's how I like to trade. That's how Pa taught me how to trade. Big proponent of the Mark Douglas style of being able to scalp out of some on the noise, taking advantage of some profit while you can, and then giving yourself a risk-free opportunity on a runner. But yeah, Dallas Fed Services, kind of interesting. Previous was minus 7.7, forecast at minus 4, and it came in with a good print of 2.9. And then Dallas Fed Services revenue was also a jump up. So that's, again, whatever you make out of that, I don't know. You could start getting into this regime where good news is bad news for the market, because if the Fed doesn't feel like there's anything to worry about in terms of inflation and the economy, then they're certainly going to be more worried and stay with kind of Warsh's hawkishness in terms of maintaining price stability and having to hike. And so, that's sort of the age-old saying in terms of the Fed watch kind of stuff is don't fight the Fed, right? If they're hiking, then in theory, let the liquidity is coming out of the market, and if they're cutting, then the liquidity is going in. So you are seeing a little bit of a potential reversal here in the RTY. It's at its sort of previous breakout point now. So this should, if it's true support, it should hold. Right? But if it gets down below this previous candle's low, now it's right back into the middle of this range. And oftentimes that can mean that they're going to target, sort of the bottom. They may not be able to target the bottom, but again, they might be able to target the stops below this 20 or 15 level, and they might really just want to come all the way through and stop people out overall down there, right? So it's sort of a cautionary scenario for me right now, because all of a sudden, when you have that thrust up and back down to the 33s, this could be a little false stop run back down in here. And if it recaptures, then you could see that thing continue to rip. But this is a cautionary spot for me, because once this red candle closes below the moving average here, you got to worry a little bit and wonder if they're coming to, they're starting to come in with a sell program, and they don't start just selling the lows on each of these 1-minute bars. So this is typically where you start to see, after an hour in the day, it could develop into a good reversal signal. But you just have to kind of decide, okay, is this level the level that I really want to watch and that I think is meaningful? And then does the market also agree with me? Does that 33 level, is that the big level? Is it going to hold? Was that like a little miniature stop run, or was that our chance to get in, right? Because now we've got, if this bar closes green again, maybe we start the next kind of thrust upwards. I haven't even opened my trading platform. I think a lot of you guys are trading your own accounts. Is there anyone? How many guys we have in here trading prop accounts, Pitbull accounts? You want me to show you what that looks like? Why don't I do that? Okay. Let's see here. I'll just drag this over. Okay, so when you sign up for a for a Pitbull account, and I don't know how exactly it works. When you get to this screen and you've registered for an account here, then basically you're going to go over to challenges. So what's interesting and a little bit tricky with this stuff, right, is like if you're on the Pitbull, pitbulltraders.com website, that looks different, right? It's a little bit different. So and they're still kind of working on all this stuff. But this is, where you would really be starting. And when you start an evaluation or you hit login, it asks you to register an account, right? So that's where you put in your email and password. Even though you haven't paid for anything, you haven't signed up for an account, right? So then it gets you into, this is sort of like our dashboard. And this is where you go in and purchase an account. I like to do the end of day trailing accounts because I feel like for me, it's a little harder to adjust to the raising, the trailing drawdown stuff. So I typically buy a challenge that's an end of day challenge. And then, so what you want to do here is, fill out what size account you want, the platform. Like I use Rhythmic so that I can either use Rhythmic Trader, RTrader Pro, or I can use Niels's awesome platform, the Delta Trader, which is built on top of Rhythmic. And there's a lot of really cool stuff that happens there. And so for a 50K account, it gives you kind of a quick rundown of your rules. basically you have to trade it 3 days minimum. You have a limit of 6 mini contracts, 3,000 profit target, 2,000 drawdown. And then you can go in here, you fill out all your stuff. You go in here, you have to read the terms. And then you can use the PIT 30 discount. Hit verify. So then we've got $69 charge. If you were looking at a $25,000 account, it's $55. And you can see the different rules, right? So 3 contract minimum. I don't know why I tend to like the 50Ks, and I also kind of like doing the 150Ks. So you can do that. You click on those, pay for your account, and then here, let's see if I have one that I can do. I'll just do a 50K, $69, create order, proceed, put my card in here. I have red. Oh, oops. Don't be stealing my credit card info now. All right, so what'll happen here? Oh, now I gotta get a text. So it does it like a 2-step verification. Okay. Okay, the payment's been processed. So what'll happen here is it'll take a few minutes and you'll see an active account pop up in here. Let's just check on the markets for a minute. Okay, so now we have a little lower low. We have our moving average rolling over here. So for me personally, I'm now back on a short sell signal. Okay, sorry, get my banana out. So if you were taking the reversal signal, right? So what happened was we got a new high, we rejected, we came back up here, we broke that low, and then as it's breaking that low is when that moving average starts to roll over. So that next pullback to the moving average is a classic reversal signal on my system, where if you were trying to short that there, then obviously you can just put your stop above the high of the day, or you put it tighter, and you just say, look, I don't want this level, the high of that bar, to get broken at all. So if you had been trying to short it at 35s or so, you could have used a 3 or 4 point stop right there. And then your target, like I've been saying before, is this bigger moving average below at 75.10, or then at the open 7,500, or at the overnight lows Or you can look on the sheet and just decide. If it pulls back to the open, you have the Globex session open at 95.5. If it really starts getting, going to the downside, then, you probably go down and test the pivot at 74.65. And you have the 5-day moving average coming in at 75.50, 74.50. Right? So that would be a way to theorize your downside targets if you were short. And so same thing I do with the box, the ATR box. You can come up here and say, well, let's say the high of the day is in and it decides to sweep. Then if it fulfills its ATR, it could trade down to 74.33. Okay. So again, we don't know that that's what's going to happen. I still sort of like this concept a little better. Let's see what happens, right? Right now I'm flat. I am in a period of time where I can be taking trades according to my system and my rule set. And so the question is, does this little congestion area hold as support, right? Now let's flip back over and see here. I don't have that going through quite yet. But what happens is it takes a little time to process the payment and the account opening with Rhythmic. So sometimes the hang up is with Rhythmic. But oftentimes it happens pretty quickly. So we'll see how quick this can go here for us. And then if you're a first-time user with Rhythmic, like what you have to do then is you go here to the download page, and you would be downloading Rhythmic as your software. And you can also download, or you can connect to the Delta Trader platform. But I think the first thing you have to do, I think, is the Rhythmic platform. It has you sign the agreements for the software, and you guys are probably familiar with some of that stuff. And that way you've got it on your system and ready to go for when this account pops up here. So we'll just give it a little more time, but got Apple making a new high. We've got Google trying to go bid, but the rest of the Mag 7 starting to show weakness, right? Meta's on its lows. Microsoft is pulling in. NVIDIA is still pretty much break even. As far as its RTH range, it's break even. It's up a little bit on the day, including the overnight. Get a pretty good rejection right here on the RTY. Look at that, pulled back. Let's pull that up. So it made its thrust, ran a couple of these stops, could not get over and through these stops. And when it pulls back, look at exactly where it pulled back to, that little moving average right there. Now this could be a great reversal trade if you were trading RTY. Wait for this bar to close over the next 5 minutes, and then look for a little miniature higher low kind of pattern to buy with a stop below wherever that candle closes. But if you wait for it, you might be avoiding a huge reversal candle. because they could take this thing down in the next 5 minutes. They could just sweep right back down, to the low of the range, the low of the day and stuff. So that's why sometimes I like waiting for the candle formation before I put in an order, because it can sometimes avoid you just getting like obliterated by a market sweep. Let's see here. Try this. Yeah, that account still isn't ready yet, so. Hopefully it won't take too long. I can get in there and make some trades with you. Let's see, I can try my personal account. Let's see what I got going here. That's not working right. Okay, well, either way, we're watching this develop as a nice reversal pattern, sell side activity here, right? I mean, that's a big 2-bar reversal rejection on all of these charts. This was a really beautiful 15-minute doji pattern on the NQ. So when I see that after a big thrust like this is one of the best signals that I've seen for doji pattern. You get a big thrust, you have a nice tight doji, you can bracket it and either short the breakdown or buy the breakout, because sometimes these can be a beautiful continuation pattern as well. But I find them to work a lot better on the reversal pattern. So what you would have done is shorted the low break of this doji with your stop above the high. And that's, for me, that's too wide of a risk. So especially in the NQ, I'm not going to take that. But if the range of the doji is too wide for you, then you can also just use like the midway point of the doji as your stop out point. What you want to see is when it actually breaks that low. So that low was 369.5, and corresponding low is right here. That was when it made that low on that bar. So when it breaks that low, like it did right there on that candle, what you want to see is that you want to see it actually sell through a bit, like immediately trigger some selling. And even though this one triggered some selling and pulled back, you see it didn't reverse hard. Like, what you don't want to have happen is you don't want to do a short sell stop here, have it just barely stop you out, and then immediately tick to the upside. If it does that, then they're probably trapping everybody and it's going to go back long. But the fact that it couldn't really rally back up through here. Now it's got a nice continuation pattern. And now for me, I'm shorting these pullbacks to the moving average and then looking for, like I said, at least a test of the open. Like you can see in the RTY chart, so far that moving average maybe hasn't held. I mean, it's still right there, but the RTY got all the way back to the opening print and tested. And look at YM is below the opening print, right? So to me, this is a decent short setup when you have a first hour thrust, a reversal, get short, see if they can retest the open. Sometimes they break right through because there's a lot of sell stops right below the open. So another great trade setup that I use all the time, or a lot, is basically a test of the open. If you have our opening print, we tried to trade lower, we couldn't. If you come all the way up and then all the way down like this, what I like to think of is if the big players had stock to buy on the open and stock to buy, which helped cause this opening thrust higher, usually they have more to buy. Usually it's like if they get another chance to buy stock at the open, they will. And so usually when you have a pattern like this, if it can come all the way down to the open, you can either buy it a little bit above, right at, or even a little bit below. And some people take that exact setup and take all three of those entries and layer into a long position with the expectation that the buyers are going to come back in. I like to be more precise. Like if I'm taking that setup, I just buy it at 7,500 and a quarter. I know that they're probably going to trigger a few stops below that. So it doesn't bother me too much if it prints 99 or 98, but you don't want to see it just collapse through it because that means there's some big sellers below that level. But it's also a kind of a decent entry to either try buying right below it, and sometimes you just barely get filled and then it explodes back up. And the part to be careful about with that type of trade is if you see something in your charts that you think was previously leading and then it reverses and goes back through the open and then everything else starts to follow, then you could just take it the other way and say either I want to short below the open or see what happens if it goes through the open really hard, then look for a short retest of the open, because all of a sudden you start to get all the longs feeling like they need to start bailing, right? This is a nice reaction off, a level here that they so far haven't penetrated, right? Same thing in NQ. It could not break that low wick. And the reaction on the RTY is quite good as well. So I don't think there's too much to be worried about on taking these signals today. Like this is a nice, pretty smooth price action. It's not super volatile. Like this is a good day to be taking these signals, So if you're long biased, you didn't want to participate in this on the short side. Well, now you've got a nice reversal setup happening because price came down, tried to sweep. It held that support there at the previous overnight highs. It got back up above the moving average here on the 1 minute, and now it's giving you hopefully a reversal setup buy. If you can get it now at the 24 level again, you can have your stop at 16, or instead of having your stop there at that obvious point, I like to just use this this bar right here is your controlling bar. That's the one that kind of violated these previous highs. It put in its third bar in a row. So technically 1, 2, 3. Now you got 4 or 5 bars in a row of uptrending, right? I know it's a 1-minute chart, but you can read and do these things a lot off of these little miniature patterns. And they give you some really great entries. So the concept here is that anyone that was short is hoping that we get back down to these levels to cover. And that to me is about the best spot, is either like right at the retest of the high of this bar, or possibly even at the retest of this doji. But this is the controlling bar right here to me, is this one right here. So if we're getting a buy, you know, I want to see a bar come back down into this range and then buy it and then have your stop down below here. So it can give you an opportunity to get in with a 3 or 4 point stop. I know it sounds way tight, right? But like this is my preference for how to trade, because I don't like taking wide stops and having a big risk. Let me try a refresh. I don't know. So that was that one. Clyde. I already did this though, I thought. Yeah, I already did it. So counts. Yeah, I don't know why that's taking, seems like it's taking a little longer than usual today. You guys have any other questions so far, or anything you want me to review with you? I mean, look at the crude chart. See how now it's starting to go to the downside. You know, to me, now you got to be thinking, boy, they have a good chance of just collapsing it again. They just seem to keep trapping everybody long on this trade. At some point, it's gonna, likely have an absolutely ginormous short squeeze on some news about the war or whatever. Maybe it's tomorrow with the inventory number, right? So ideally, we almost get a big flush ahead of tomorrow's inventory, and then finally maybe all the shorts will be trapped, or everyone that was long will finally be flushed out. But look at how this trade just developed, right? So the buyers come in, you get a nice little pullback. It's a perfect one touch of that moving average, and boom, right? So now you've got all these buy stops that are set up to the upside, and it doesn't mean we're going to take them out, but it's a really nice reversal setup with a really nice risk reward and a really nice thought about what if this was really the first move, 50-point move, you get a 23-point pullback, right? Almost a 50% retracement. And now what if we get a measured move from that point? So from 17s, 18s, 50 points, but oftentimes the wave 3 is bigger than the wave 1, right? And then you could have this thing go to 70, 80, 90 to the upside, right? Let's see, Terry, indicators are Yeah, this is, so this one right here is a simple moving average. It's a 13 period based on the closing price. And the difference is that I have it, let's see, which one is it? The difference is that it's this indicator. The title is Moving Average Slope to Determine Market Direction. That's the name of that indicator. If I didn't want it to color green and red for me, then I can hide that one, and I can put this one, I can unhide that one, and it's my turquoise color. And I can have that one be purple, right? So the purple one is on the 1 minute chart is set to 195 for the period. And the reason is to see how that comes in right around 75.12. And the reason is that way it corresponds to my 15-minute chart over here. So see how on the 15-minute chart, it's currently showing 75.13. And then down here it comes in at around 12. Well, that's just because there's more input, right, to the 1 minute candles. And then the other indicator I'm using on this, if you like this concept of being able to shade the background differently, so like here's our opening price right here where it goes from kind of gray to like this green, army green. And then that's like, for me, the concept of trying not to trade too early. And then this window is now black because I'm in my 1 hour period where I should be trying to trade. This is like my sweet spot of where I like to try to get involved on an entry. And the reason for that is I've let the early price discovery take place. I now have a good long signal that's lining up with being above the open, having an upsloped longer moving average, having an upsloped shorter moving average. And ideally, if you can get long here, you then want to get a trade that hopefully has a runner that literally can hold all the way into the close, because that's what I want to see on a day like today, is a squeeze into the close, a big markup at month end, quarter end, and take profits along the way. If you get some opportunity, you lock some profits in and then hold your runner and see if you can get it all the way through 7,600 or whatever. This is the other indicator that I found where you can use this background shading. So it's called NSDT, session background shading. And basically then you can go in here, hit the settings, and you can adjust. It gives you 3 different inputs. So you can set the time, and then you can set the colors and stuff. Like you can, they're different based on the different time frames. So if I unclick that one, it just takes out those colors and shows us, here's the overnight, and then here's the regular. And then there was one other that I thought about using too, that I can put on here for a second. This one I think is kind of cool too. It's the IB first hour. And so this guy's indicator just shades the first hour, gives you the first hour high and low, and gives you some targets based on, you can see it's plus a half X plus 1X gives you the actual value here, and then gives you the retracement amounts. And this is a guy that just trades, you know, basically he says, let the first hour of range trade, look for the breakout. So it's similar to what I was showing on the NQ chart earlier. You know, those small time frames can be done the same way as this type of trade, where, you know, you're letting an hour go by. The fact that it moved higher indicates that there was buying interest. And then the pullback to the 50% value, he says, is often a really great spot that you want to see hold, right? So like somewhere in there, you start building a long position if that's your style, or like we just were doing a second ago, you wait to see those buyers come back in, and you look for that reversal pullback setup and go from there. So that one's called IB first hour. And it's kind of cool. Like I don't know. I don't really like quite as much stuff on my charts, so I'll probably take that one back out, but okay, there's my account now showing up as active in my dashboard for a Pitbull 50,000 account. Okay, so all that's doing is kind of showing me the account. You can click on here. Oh, it's being processed. Okay, so that doesn't matter right now. Let me drag that back over. So now if I go in here to my RTrader Pro, let's see if it gets me in here. Let's see, I guess I have to update some of these. ESU. $32661 is my account number. Look at that, 32661. All right, so what I like to do when I'm using this is, because I don't like their charts that much, you can't, I need to update this, but you can release this window, which is cool. And you can have your DOM right here, kind of put it over in the side so that I can still see the YM and RTY trading. But now I can get involved and try to take a trade here. So I'm going to do, I've got different brackets configured. I'll do a 3-lot, 4-point manual stop. So we've had this run. We're pulling back to the moving average. I'm going to try to buy the low of this bar, 31.25. I know that 33 is sort of a level I was watching, right? So I want this to be a little false break down below the 33 level. It might be better to try it like down here somewhere again. Especially I'm watching the bond markets go to new lows. But there I got filled at 31.25. I have one offered for +3 because I want the 33 level to go through and now become support. So I want the stops to get run, and they may not. This is a trailing stop right now. So every time it trails up to a little new high tick for me, then it'll keep trailing. I've got one offered at +3 and one offered at +6. And we'll see if I can get lucky on it. I mean, a lot of this stuff is just trying to pick a spot and then hoping that you're on the right side of the market flow. We got Google and Apple going out to new highs, so that could give us a little lift. All right, I got one back, and now my stop is still trailing, but you see how it updated the quantity to a 2 lot. And basically, because it's still trailing, now I've locked in a small profit on this trade. If I get the second one back here at 37.25, I've locked in a nice little, $500-600 profit on the trade. Okay. But ideally, we want to see this now run some stops. So if it does, the 33 is now that level that I really want to see hold, which would be the bottom of this controlling bar. So I want to see this bar print up here. And then that's my new controlling bar where I don't want to see it come back into the middle of this little range. I just want to see it start running the stops. So there, I got the second one back. I've locked in a $500-600 profit on that trade. And now the other thing to be aware of here with a prop account, right, is that when you have consistency rules, what the consistency rules say are, like in Pitbull, you don't want to, it's a 33% consistency rule. So if your profit target is $3,000 on the evaluation stage, you don't want to exceed making $1,000 on any one day. So instead of having my offer way up here like this, right? See how that bracket offer was just, it's at like a random amount, whatever I configured this to. So I put it in at 160 ticks or 40 points. But instead, because I don't want to break my consistency rule, what I really want to do is just sell this thing right here at the high if I can, because then I can just move on to the next day, right? So I have one offered at right at the high, 42, which I would expect would tick at some point today, hopefully here in the next couple minutes. And then I can cancel this is still trailing, right? But then in order to pass my eval, I need to basically trade 3 days minimum, make $3,000 profit, and I can't make more than $1,000 a day. Okay, and then if I do that, then I pass and go to the performance account. And what's beautiful about Pitbull is the only difference really in the performance account and the eval account is that in the performance account, your minimum requirement is to trade 7 days. And in that time frame, if you hit and get above your 3,000 profit target, then anything above and beyond that is where you request a payout and you get paid that extra amount. And the reason that's really, I love it is because, you just spent $69. The rules are hard. It's tricky to pass these things, and you have to somewhat adapt your own trading style to be able to pass them and to be able to get to payout. But they are, we all are wanting everyone to be successful here. That's why we're here. We're here to teach. We're here to help. And, the concept of what prop firms are trying to do is to teach people to manage risk. And if you can manage risk effectively in trading, you have a good chance, but if you can't control your emotion and your risk management, then you just are going to blow accounts, whether they're prop firm accounts or whether they're personal accounts. You're going to blow them and it's going to feel like shit. And, you know, everyone does it as a trader. It's sort of like really hard to not go through that experience because it's really a tough game. But if we can figure out how to do it on a consistent basis, then the lifestyle it affords and the ability to make money in any kind of market and just the infinite number of ways that you can do so is spectacular. And so, I mean, my dad always kind of like cautioned me, like, hey, are you really sure you want to do this? This is really hard. It's not like it was when we were trading in the pits. And he reminded me of that the other day. When they traded in the pits, he was a local, so he traded his own account in the pit. And all they were doing was trading inside the spread. Back then when he started, I think the spread in the OEX was a quarter point wide. So they would just buy and sell the spread all day long, and that's how they made their money. And it was pretty easy to do. And occasionally they would trade with the specialist and make a bigger market for the big block orders and stuff like that. They would rarely take expirations or delivery of contracts or stuff like that. They were trading the spread, and then as things started to get more and more difficult, the spread went from a quarter point to a 16th or to an eighth to then a teeny, which was a 16th, and then they start coming out with pennies in the stock market and then sub pennies, and so at a point for my old man anyways, it was like, hey, there's no real edge here anymore, and I think that in a lot of ways what that did was it changed the focus in our world from quick scalp, trading the spread type of market liquidity that you're providing to instead trying to hold your trades a lot longer, right? Because honestly, like right now, how do we know what the real spread is in the ES, for instance, right? I mean, we know it's a quarter point, right? One tick. But to me, that's not actually the real spread in the ES. The real spread is what's the noise, right? For regular noise, just regular market, this, sweep this, sweep that, like without it really meaning anything or doing anything, that's the spread. And so when you hear people talk about trying to enter at liquidity points or taking something off at liquidity points, what it is you're trying to take advantage of the algos and their liquidity. That's kind of like you're trying to figure out what the real spread is in the ES. And so using a ATR as a tool might be a good way of doing it, or just having an idea of like, if our 5-day ATR is 108 points, then the liquidity is maybe 10 points, like if you're looking to enter here and you miss this entry, for them to reject a new high right here, maybe the liquidity sweep takes it right back down to that 33 level. Or you could say the midpoint of this controlling bar, right? Which is, you'll hear people also talk about fair value gap bar. They're talking a lot of times on higher time frames. You can apply anything, anytime to any time frame, right? It's all kind of the same. And that's the beauty of trading, the beauty of candlestick patterns. It works, right? And so but the thing about it is, the higher the time frame, the wider the stop typically, and the longer then your holding period should be, right? And when you widen out your hold time on a winning trade, that's where you're kind of gaining the edge on the algos, because if the algos start bidding this up, I mean, you watch. I'm going to try to take this off right here so that I don't go over my $1,000 threshold for the day. But if they break the high and the algos start taking this up, I'd be very surprised if we don't print 75.90 today. So that's kind of where I'm at. It's been 2 hours and 15 minutes of me nonstop talking. I hope you guys kind of get where I'm coming from, understand some of the style here, and hopefully it's helpful for you. And I'm always glad to just talk, even if it's not like formal or anything. You're always welcome to contact me and stuff. I'll put my links up for my stuff, and then I'll leave this up. It looks like I'm about to get shaken out. I didn't quite get my, it's sort of silly to offer, I could have probably done fine just offering 41.25, right? But I'm like trying to perfectly match that $1,000, just under $1,000 level. But look, if it can't pull back, 3 or 4 points right here, then guess what? The buyers are going to come in and really move this thing to the upside, so I'll leave this up just until I'm kind of out of this trade, and then we'll go from there. But for now, I'll go ahead and sign off on the broadcast, and I'll put my my links and stuff in here. And so, and to quickly answer BD, the idea behind limiting the profit is partly they don't want people gambling. Like, they don't want you to just buy an account and just put your biggest size on and then quickly pass it and stuff. Like, what they're really trying to do is show how if you can manage your risk and you can consistently take 500, $1,000 out of the market every day, then hey, that's a good living. Like, I'd love that. Right now, I haven't been able to do that. I mean, I'll be perfectly honest with you. I struggle with consistency just like everybody, and there are times when I'm really consistent and it feels great, right? Like, for those of you that know and have gotten to that point, if you go along making $1,000 a day, and every once in a while you throw in a big day and you make $5,000 or $10,000 or something like that, and you get to the end of the month and you've made 30 or 40 grand in the month. If you've never done that before and you start doing that trading, it's like mind blowing. I mean, it's like a whole nother world you're entering into, because all of a sudden, you've got this skill set and this ability to make some real, life-changing money, even if it's a part-time gig. And so that's where I'm constantly trying to get to. And I've had my amazing golf shots, like where I've had those kinds of months, and then it keeps you coming back, right? And then I have those times when I just get too emotional or something's going on in your life. I think it's a good idea to have rules of, like, Danny has talked about it, where as soon as you pull money out of your account, the next day, I've done this so many times as well as Danny, the next day you have a big blow up day and you lose a bunch of money, So it's like trying to find your own personality and have rule sets behind how you manage those situations. Like, if you're sick with the flu, or if you're going through, conflict in your relationships or something, it's like, just turn the thing off and give yourself a week or a few days to take a break, and don't worry about it. All right, so I got flat there. I'm canceling my order. and I'll come back tomorrow and trade that account again, and then try to make another 1,000 and then another 1,000. If you only make 500, that's fine, right? But yeah, that's I think we're gonna go ripping here, guys. So I hope some of you got that long reversal. The time frame was really good for the setup, and I think the time frame is really good to hold into the close. So that's what we're hoping for. Yes, Stuart. So like once I pass the eval and it goes to a pro or a performance account, you have to hit the same 3K profit target, which then becomes your buffer. So at that point, your breach level or your stop out level is basically the original 50K account value. And once you get above that 3,000 level, let's say you make you build up so that you have 10 grand in the account, well, then you can take out the 7 or whatever. So it allows you to kind of build your skill set on being a consistent trader, hitting singles and doubles, and then occasionally you get your home run, but the risk is you pay the $60 or whatever, and you have to work really hard and stay focused really hard. Like every time you're trading that account, because as soon as you lose focus, you blow the account, you have to start all over again. So that's the part that can be super frustrating with prop firms. But once you start actually passing them, and once you start getting the payout, now you've got an account that cost you $60 or whatever, and you're drawing a few $1,000 out of it every time whatever your payout is that you get, it ends up being a pretty sweet deal with these prop firms. And so I think the best part about Pitbull is that the rule set doesn't change a whole lot. I mean, they're all hard because you have to figure out what each one of them's rule set is. And then you have to see if you and your trading style and your personality can adapt to that rule set, because that's one of the hardest parts of trading, is figuring out your own personality and your own style of trading that fits that personality. And that's not easy to do unless you're in there making trades and trying to see, like, well, how does it feel to buy a breakout and then have it go against you? How does it feel to buy a pullback that doesn't stop and just continues to plummet? You can't know those questions, those answers, until you've experienced it and experienced losing money. And so it's like a battle that you have to kind of pay your tuition on to kind of get over the hump. And if you're really good, or you really have a good wiring of your brain that can deal with all this stuff well, great. But most of the time people don't. It's all stuff you have to work on over the years and continue to work on, and continue to be cautionary about manage your risk first. If you manage your risk first, the winning trades will take care of themselves. So okay, now I'm gonna sign off. I appreciate you guys all listening, and we'll do it again next week. And I think tomorrow David's planning on being in the room, so we'll catch up with you later, and let me know if you need any help or have any questions. All right, cheers, everybody.